What is going on, you guys, and welcome back to another platform review. This one was actually in by viewer request, but my name is Brandon, and today we are going to be going over Quest Wealth Portfolios, which is Questrade's robo-advisor service. We're actually going to be doing a deep dive into the funds, the fees, the performance, and we're actually going to be comparing that up against Wealthsimple Invest robo-advisor service. So as of today, just as a brief background, these are probably two of our most apparent robo-advisors. They are the two most popular ones here in Canada. There are a lot up and coming, and I do plan to do more reviews on more going forward. I'll pause for a moment, and if you haven't seen my other reviews on Questrade, on Wealthsimple Invest, and Wealthsimple Trade, I've really done a bunch of them, and I'll link them all below, which you can absolutely check out, subscribe. I say we don't waste any time here because we're going to go very in-depth. This is hopefully the only video you need to watch if you're considering these platforms. All I ask in return is that you drop a thumbs up on this video if you do find it helpful. And actually, there are some referral links in the description. If you do decide to go with them, you'll actually get some bonus money while signing up. I'll explain that later. But very briefly, what is a robo-advisor? I know this may sound very too basic for a lot of you, but a robo-advisor service is where you go out and you essentially fill out a questionnaire, and based on your answers, based on your situation and how there's an algorithm that's computing all this data, depending on how they feel your situation is, they suggest a portfolio for you. And as you can see here, I like this little graphic on Wealthsimple, because they basically show, if you're a conservative investor based on risk level, this is kind of some of the different areas they'd have you investing in. If you are more of an aggressive investor, well, the weighting totally changes. And again, we're going to be diving under the hood at all of this, but either of these are great options if you're the type of investor that wants to have your money managed for you, in the sense that, you don't want a traditional advisor. You don't want to go to the bank and have them working and paying high mutual fund fees. You can do this index investing ETF style. Low cost index investing is really the term that you'll hear about that. And it really is a great option. Well, again, we'll talk about fees in a second, but I am getting ahead of myself. Let's dive on into, we're going to first take a look at Questrade and actually look at the portfolios. This is really, the main topic of today's video is, what do you invest in? Like, how do the portfolios look? What are my investments going to look like, and what are the returns going to be? So I say we dive straight into that. As you can see, by the way, this is on Questrade's website. You can click to the Quest Wealth Portfolio tab if you want to go here. I went to ETF Portfolios. And as you can see, Quest Wealth or Questrade offers really 5 varieties in terms of the options you have. Starting from aggressive, you have your growth, you have your balanced, and that goes all the way down to conservative. And again, depending on how you answer your questions, depending on how they categorize you, they will kind of slot you into one of these portfolios. As you can see here, great for higher risk investors. You can have a read right up here. It'll actually show you the historical performance, which we'll get back to in a second. But for anybody interested in how your money will be invested, you can actually go down to this asset allocation tab, and you can see that in the aggressive portfolio, what they have allocated is that 32% of your money will be situated in Canadian equities. So Canadian stocks, you see that right here in black. You see the US equity makes up a very equal component. About 31% of your money will be invested in the US market. International equity is, outside of North America. So this would be Europe, Asia, you name it, at 35%. And what you notice here is that you have a 0% weighting to fixed income. So this would be, of course, your bonds. This would be your very safe loan type of investments. These typically don't provide a whole bunch of growth, but they do provide investors with income and safety. And that's why with the aggressive portfolio, you see actually a 0% weighting. You're going for growth is what we could say. And actually, if you scroll down into the ETF holdings, these are the exact funds that you'll be investing in. So let's backtrack a second. If you decide to go with Quest Wealth, they'll situate you into one of these portfolios, and they'll essentially go out and buy these ETFs in these proportions for you. If you're not familiar with what an ETF is, think of it like a basket of stocks. So this basket of stocks is titled the Wisdom Tree Canadian Dividend Growth Index ETF. I know they have crazy names, but quite simply, this is your Canadian equity exposure. So actually, if we took a second to go Google this option, and I'm literally just copying and pasting it, it's this one here, the wisdomtree.com. You can actually click into this onto their website, and this will give you the exact details of this specific fund. So again, Questrade as the robo-advisor is selecting this as 30% of your allocation. And I mean, if you want to go ahead and look into it, you could go to, let's say, top components, and this will give you a breakdown of this fund. So as you can see today, this is as I'm filming this, November 3rd, whatever the case is, this fund invests in Great-West Life at 5% of the weighting, Magna, Thomson Reuters, CP Rail, CNR, both railways there, Intact, Rogers, Restaurant Brands, Bell Canada, and TELUS. And that's, of course, just half of the portfolio. But point being is that if you went for this option, 30% of your money, whatever that value is, would be allocated into these stocks. You'd be a shareholder in these just indirectly. If you wanted to look at this, you could go down literally fund by fund. Oops, I'll back out there. Fund by fund, you can now move down to the US equity selection and see that again, a 30% weighting is in the SPDR SPDR total stock portfolio, total stock market ETF. So again, I'm just going to Google this just to show you guys for simplicity's sake. Like, you can go do this on your own. We're obviously not going to go through every single example, but this is how you actually tell. I clicked on the holding tab there. This is how you can tell what actual stocks you're investing in. With the US fund, you're investing in Apple, you're investing in Microsoft, you're investing in Amazon, Facebook, Google, Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, and NVIDIA. Again, these are just, of course, the top 10, but you get the point. And you could go through, I mean, really, if you want to look at each ETF, this is a REIT, so this would be real estate investments. This one here is the iShares MSCI EAFE. I know for a fact this is our international one. So again, we'll take a quick second, and I'm sorry, this is going to be a bit of a longer video, but I do want to be very thorough for you guys. 28% of your funds in this case are situated in the iShares ETF. So iShares is another fund provider. It's actually BlackRock, iShares by BlackRock. It's an equivalent to WisdomTree. It's an equivalent to SPDR, but iShares offers their version here. And in this case, if you went to holdings, you do have to go to aggregate holdings. I just know that's a tricky one here. But very simply, you will also be investing in international companies like Nestle, like Roche, like Novartis, Toyota Motors, SAP. You get the point here. So it truly is a well-diversified fund. And again, this is the benefit of going to a robo-advisor, because they'll suggest these for you, they'll go out and buy the funds, and they'll keep you on track. If you go back up to these different tabs, let's assume you're the type of investor who doesn't fall into the aggressive category. Let's assume you're somebody that is more of a balanced investor based on your risk tolerance, based on the answers you provide them during your questionnaire period, or the exploration period, let's call it. What you'll notice is that if you scroll down, the allocation is quite similar. We have a Canadian equity component. You see it's dropped down to 20%, or 19, 22, but we see the fixed income component, the safe component, has bumped up to 38%. So let's call that 40%. And that's really what defines the difference between an aggressive and a balanced investor. Because actually, if you look down to the ETF holdings again, you'll actually notice pretty much, well, actually here, you'll notice it's the exact same funds, the WisdomTree fund that we looked at, the total stock market funds, and the iShares, the MSCI, like, it's all the same funds, just in a smaller proportion. Then, of course, you do have the bond ETFs. So these are our fixed income, let's call them safer areas, that represent about 40% roughly, right? So that's what differentiates it. That's what differentiates the growth from balance. And then obviously conservative on the far end, this is like a very safe investor with 80% in fixed income, and then a small component to equity. So that's essentially just a background on kind of looking under the hood of what you're going to invest in. Again, feel free to take, if you actually want to look into it, you can go look into these ETFs, as I just did by Googling it, and look at the actual holdings. But let's now compare that over to Wealthsimple Invest, because, well, I'll just exit out of these, because these are the funds Questrade uses. We'll now go over to Wealthsimple Invest to see what their funds look like, what ETFs they use, and essentially look under the hood on the Wealthsimple platform. And actually, I have a note here. I'll just skip ahead to that because, this is kind of in the back end, but I did come across this. This one shows us the holdings of the Wealthsimple fund. So again, we'll get to performance in just a second, but with Wealthsimple, this is their version of ETFs, and it's not displayed as nicely, but as you can see, we have, this is just a hypothetical RRSP portfolio. We have VTI, which is the Vanguard Total Stock Market Index. this represents 20% of the portfolio. This is an ETF. I mean, we can actually take a look into it just to showcase it, but it has a nice little write up here, 3,800 large, medium, small cap companies in US equity. So this is what we would call our US equity component. They have a section dedicated to minimum volatility global ETFs. So this is, again, international companies. You'll see large mid-cap stocks in Europe, Australia, Asia, and Far East. We see a 15% exposure here to the emerging markets. So this is countries that are 300 plus exposure to 300 plus countries that are emerging with equities that have minimum volatility. Again, you can go through the case, you can go through the display here if you really wanted to get into detail of it. But the point is, this is their breakdown. And just to showcase, I mean, if we again took the Vanguard Total Stock Market Index, which is the ticker VTI, so that's these tickers here. This is the actual ETF you'll be buying. What we can do is go down to Investor, VTI. I see it right here. We'll let it load up for a quick second. And as you can see, by going into Portfolio and Management, we'll actually be able to scroll down and look at the exact holdings within this fund. So again, in this section, sorry if I'm going too fast, I'll slow down, but the month-end 10 largest holdings are Apple, Microsoft, Amazon, Google, Facebook, Berkshire Hathaway, and Johnson & Johnson, Procter & Gamble, Visa, and Tesla. So essentially, this is just a replica. This is just a mirror image. It's just a copy of that SPDR fund we looked at. Remember, we looked at the SPDR Total Stock Market one, this one here? Again, they're going to be investing in the same things, but this one is brought to you by this provider. This one is brought to you by this provider, right? Does that make sense? They're equivalent funds. They invest in the same darn thing. One's just by Vanguard, one's just by SPDR. So again, we don't need to, I think now that I've showed you that, you guys can go here. If you guys want to go to this exact link, by the way, I'll put it down below because it is a little bit hard to find. But if you want to go in and actually break down, well, what holdings am I going to have if I go with this portfolio? Feel free to do that. I think it'd be a little absurd to go through every single one here, but this is your breakdown, okay? You see a 10% weighting to the XIC, which is a big Canadian index. They're very, very well diversified. I think that goes without saying. But one of the things that I think we can now advance on to this part of the video is returns, because clearly an option, a question that you guys may be asking is, well, which platform, which robo-advisor is better in terms of what's going to make me the most money? And my quick word on that is that they're going to be quite similar. Let's understand. You don't want to ever dig too deep into, I mean, oh, this one was a percentage high. This is like significantly better. You will have better ones than others, but at the same time, you know, it may just be a little discrepancy over this time period. They both follow a very similar index investing strategy. So over the long term, I wouldn't expect much of a difference. But just to show you guys what we have here, this is the Wealthsimple growth portfolio. So if they kind of situated you into a growth investor, you'll see that based on an 80% equity portfolio below, this portfolio has grown by 45% net of fees, which we'll talk about later or in a second, since 2014. So this launched in 2014 and has been up 45.9%. You can see the growth of a hypothetical $10,000. If you invested $10,000, that's what you'd be looking at. Your total returns would be up at 14.5 over this period. And if we went back to Wealthsimple, back to Quest Wealth, what we'll look at here is the growth tab. I know it's tempting to want to look at the aggressive tab, but that's actually not an apples to apples comparison, because the aggressive portfolio is 100% weighted to equities, whereas this one that we just looked at was 80% weighted to equities. So the actual comparable that we'd be looking at here is the growth portfolio, which is 80% equities, 20% fixed income. And as you can see, this one, since November 14, so a very similar time period, actually returned 36.7%. So 36.7 with Quest Wealth versus Wealthsimple, which returned 45. So about a 10-point difference there, which again, it is meaningful in the sense that, yeah, that's quite a big difference, 10 points, but that doesn't necessarily indicate that over the next number of years that's going to be the case. It could go either way. My takeaway from if it was severely different, for example, if one had lost, negative 50% and then one is up 45%, that's a meaningful difference. this to me, you could pick and choose. You could get finicky about it. But to me, that's a very, again, you pick and choose. But over these time periods, looking at it from August 2014 to now versus here from November 2014 to now, this has returned 36%, being Quest Wealth, and Wealthsimple has actually outperformed that fund, if that makes sense. Now, let's move on to a segment on fees, because fees are a very important question when you are going to be using these platforms. In fact, it's really one of probably the main driving decisions. Sorry, let me just clear out these tabs for simplicity purposes. But it's probably one of the driving reasons why somebody would pick either Questrade, Quest Wealth versus Wealthsimple. And the one thing to understand is that with both of these platforms, there's two fees that you're going to pay. There's the fee that goes to the platform, like Wealthsimple itself or Questrade itself, and there's also what's called a MER, a management fee on the funds that you buy. And I actually saw a little chart here that explained it well. So this is on Quest Wealth's website. It says, let's just look in on this here. We can read this quickly and then I'll show you that chart. We pay over 4 times more for your, why pay over 4 times more for your investment when you can get a portfolio fee of only 0.38%. This includes Quest Wealth's management fee. So we'll call it the management fees of the platforms plus the MERs of the ETFs. And again, I'll explain this right here. So your average mutual fund, if you're at the bank or, with an advisor, whatever the case is, average they say here is about 2.17%, which means on every $100 you invest, you pay $2.17 per year. That gets taken off the top, and that's the fee for using the mutual funds. Now, if you went with Quest Wealth, what they're saying is that their fee is a 0.38% fee, so significantly less. On a $100 example, that's 38 cents per year versus $2.17. And obviously you can scale those numbers up as you go, but you clearly see the benefit versus working at, let's say, the bank with an advisor versus letting the robo-advisor do it yourself. And as you can see, there's these two colored boxes here, or there's two aspects, two divisions of the graph. This bottom component at 0.25%, this is Quest Wealth's management fee. So again, they're going to charge you this every year for hosting the robo-advisor service, for managing your portfolio, for rebalancing, etc., etc. And this part up top here, this is the MERs on the ETFs, which brings you to a total of 0.38 in this example. Okay, so let me explain what I mean by that. If we were to go back into, I'll just literally take you guys live with me. If we were to go back into these portfolio breakdown. So again, let's look at the aggressive growth portfolio, for example, and let's go take a look at one of the holdings. So let's assume we look at the iShares Core, the one with the crazy name. So this is our international equity fund. So again, I'm just simply copying and pasting it, and we can go over to BlackRock's website or iShares website. And again, this is one of the funds you'll be investing in. This fund in particular carries a fee. If we go down to overview, I believe it is. Bear with me to find it. Okay, key facts. You can see right down here, actually, if you go to the fees section, that this fund carries a management fee or an MER of 0.22%. Okay, so this fund in and of itself, if you wanted to go out and buy it, like aside from the robo-advisor platform, if you just want to go by yourself, you pay 0.22%. What Questrade is saying is that they're gonna charge you the 2.5 management fee plus the 2.2 for the money that you have invested in this fund. Does that make sense? And again, for each of the different funds, they have their own management fees, but in general, you see that it is significantly less than paying that of a mutual fund. Does that make sense? I hope that makes sense. 0.25 plus the MER. Now, depending on what asset size you work with, so you see they say starting as low as this, if you go to Quest Wealth with over $100,000, like you start with a balance, or you have a balance of over $100,000, your management fee gets dropped down to 0.20%. So about a 0.05 basis point drop, which is obviously a nice little bonus there depending on how much money you're working with. And the important point is that we will now compare this over to Wealthsimple, to see what their fees are, because with Wealthsimple, you do pay a higher fee. As you get down to this section here called benefits and pricing, you'll notice they have three main tiers of pricing. And again, to refresh, with Questrade, we have a 0.25 and then a 0.2 annual fee for their service. With Wealthsimple, you see the management fee is up at 0.5%. So actually a significant difference there. 0.5% management fee. And again, there's obviously the actual funds that the MERs on the funds that you invest on top of this, but their baseline fee for the service is 0.5%. As you get up to $100,000 or more, that gets reduced to 0.4. And then actually, even if you have 500,000 or more, it's still 0.4%. So essentially, as a comparison, the baseline fees are significantly cheaper with Quest Wealth at 0.25 versus Wealthsimple at 0.5. So that's one thing to factor in. Again, you could make counter arguments either way, because you could argue that the returns, which are always net of fees, those returns that we looked at earlier, those returns were better for Wealthsimple, even though they charge the higher fee. So you can obviously pick and choose, but again, my job is to just display all the options for you. You can say, well, do you want to go for the lowest fees possible, or do you want to go for the fund that performed better? That's ultimately up to your choice. Now, there's a couple points that I would like to finish off this video. I think they're very important things to know. I bet this video is getting relatively long, and I appreciate you guys sticking around for all of this. With Questrade, or with Quest Wealth in general, actually, they do require a $1,000 minimum balance. And this is just actually across Questrade. So if you have $50 to start, you have $100 to start, you won't meet their threshold, versus Wealthsimple has really no fees. That's one thing that I love about Wealthsimple. They have no fees. It's just such an easygoing account in the sense that you could start with, I believe it says it on here somewhere, maybe not. You can trust me on that. You don't need a minimum to start. You just put whatever you want in that account. So great for beginners. One thing to note is that when it comes to account types, they're both equally comparable. So you have a wide selection between RSPs, TFSAs, personal accounts, education funds, locked-in accounts, corporate accounts. You will have that exact same selection if you looked over at Questrade. If you go down to this account called Explore the Right Accounts, it's really, I mean, most people will probably be going with the TFSA, RRSP, or cash accounts or corporate accounts. But point being is that you have both the selection. I will note, and this is a very, very appealing area for certain investors, they both have their selection of these more unique funds, or these more unique portfolio balances, in the sense that there's a socially responsible investing fund. This is back on Wealthsimple, by the way, if I'm jumping around too fast. So they have their own Wealthsimple responsible investing portfolio, if that's one of your viewpoints. They even have a halal investing portfolio. And this is huge for a lot of our Muslim investors out there, or anybody that, sorry for the, I'm not entirely certain on how this works, but if this is part of your religion and you want to invest according to your values, as it says here, you do have an option for halal. I'll actually include a link, or I have a link here, which I'll look up again for you guys. If you do want to look into these two funds, I'll include both of these down below for you guys. You can actually see what's included. So these stocks are included in the halal portfolio. Obviously, we're not going to go through the whole list, but these are companies that I guess fit their guidelines, whatever that is. And these are the stocks that are held in the Wealthsimple North American SRI, Socially Responsible Investing ETF. So if you chose that option as one of your if you plan to be a socially responsible investor, you would be inherently investing in these companies. I've actually done a video quite recently on socially responsible investing, which was a fun one if you're new to that area and you'd love to learn more. But quite simply, guys, and then Quest Wealth as well, they don't have a halal portfolio, but they do have a socially responsible investing option. Okay, so comparable in that standpoint, no halal one. But more or less, guys, that is my long and hopefully organized, but I know that was probably a little bit crazy. That's kind of like my overview of the two different platforms. And I'll love to share with you now just my overall thoughts, hopefully direct you guys in the right direction. In my personal opinion, and that's really all it is, I think that both of these options are phenomenal. They're really right now the two best options out there. Like I said at the top, there's always new products coming. There's always new providers coming in the space, so that, you know, maybe this won't be the case a couple years from now. But as of today, as of filming this video, both of these are great platforms, and I would personally be comfortable going with either one. If you want to look at it from a technicality standpoint, you can make the argument that Quest Wealth is the lower fee platform. So you'll be paying lower fees with the 0.25 to 0.2 management fee versus Wealthsimple, which is at 0.5 and 0.4. But then again, when we looked at the performance, you could argue that Wealthsimple outperformed this fund. So what I would say to anybody interested in just valuing my opinion, it's go with whatever platform you feel more comfortable with. If you have friends, if you have family that suggest one of these, if you've heard good things, bad things, like, go with what your gut tells you, because you're both going to get really great robo-advisor services on both of them. Wealthsimple, I do really love the simplicity, in the sense that, like, that's kind of their whole idea, is that they're going to keep things simple on autopilot. Very easy to set up, very easy to look at. If you like getting a little more, Questrade, I think, is a little more professional, I guess you could call it. If you feel like this is too millennial or too childish, we'll go for the Quest Wealth option, because at the end of the day, they're both following very simple index investing strategies, where they just basically follow, you know, they set targets and they follow an index, like they buy an ETF that follows the index. There's nothing that insane that goes into the management of it. So over a long run, I'd expect very similar results. And as we looked at, they're all going to have their US exposure, they're all going to have their Canadian exposure, their emerging markets, international. They're very similar. It's just two providers trying to get you to use their platforms. So guys, that right there wraps up this video. I will just say before I leave off, if you did enjoy it, like, really all I ask, if you found this helpful, if you learned anything new, give this video a thumbs up, because that really does help with pushing it out more, helping get this information around more. You can subscribe for more content if you're new to my channel. If you haven't heard about us, we talk about all sorts of investing stuff. And if you did decide to go for either of these platforms, we have sign up links down below this video that will get you bonus sign up money for both Quest Wealth and Wealthsimple Invest. With Quest Wealth, if you use the link, you'll actually get $10,000 managed free. So for the first year, you basically won't be paying fees on that. So you might as well go for it. Wealthsimple Invest, you actually get a $50 sign up bonus. So they'll actually credit your account. You'll get a little bit of extra money if you deposit $500 or more. And what that does is it tells them that you came from this video, and it really, really helps out the channel. It's a really great way of supporting me. But that's really it for the video today, guys. I really hope you enjoyed. I want to say thank you all for watching. I appreciate you guys sticking through to the end, and I will see you guys in the next one.